All right, commodities have been on a run recently. Oil, gold, and silver taking a bit of a breather today, but this move to the upside, it has caught Wall Street's attention, it has caught investors' attention. And we've got our next guest who thinks that the great reflation trade, as he's calling it, has more room to run. So let's talk about that with Jonathan Krinsky. He is BTIG's managing director and chief market technician. Jonathan, it's great to talk to you. So much of the focus has really been on the equity market and what we're seeing play out in the broader averages. You've got the S&P above 5,300. You've got the Dow right around 40,000, but you're seeing some opportunity in the commodity reflation trend. What are you seeing, and what does that upside look like?
Yeah, so it's really been broad-based across the commodity complex, and we've had I would say kind of these little rolling bull markets across different commodity markets. Earlier this year, crude was doing quite well. As you mentioned, that's taken a breather. But gold, silver, the precious metals, even platinum and palladium have been really working well lately. Copper is at all-time highs right now. Iron ore. So I think that the China comeback story is playing a part of that. Perhaps the Chinese equity markets are doing very well over the last few months. And really, so it ties back, our thinking here is energy equities are attractive. They've had about a 2-month pullback, consolidation, really. It's really more of a consolidation. And so it's back to an area of what looks like good support to us. So we think energy equities look timely here. The momentum in commodity land really has been in kind of the metals and mining space. So whether it's names like Freeport-McMoRan or the gold miners, those are the ones that are trending and at highs. But we think energy equities are more timely here after the consolidation.
So talk to me about the catalyst for that reversal in energies. And you have a fantastic chart that we're going to try to pull, looking at kind of the levels that indicate a potential turnaround story for something like energy. What do you think is going to be the single biggest thing that investors should look at and say, that means that this is really going to break out of that level? You can see right now on your screen this chart showing the kind of range-bound trade of XLE1. But again, what would that catalyst be to kind of move past that trade?
Yeah, I mean, so, it's kind of one of those things where you either are buying a little now in anticipation of that breakout. We do have some buy signals on some momentum indicators on the XLE. So you could the more aggressive approach is to buy a little now. The more conservative approach would be to wait for kind of confirmation in the form of a breakout above some prior resistance. Maybe a couple of dollars higher in XLE, but it's really right now at that downtrend line from recent highs. So, I think you can do a little buying here and maybe add a little bit as it shows you strength on the move through that downtrend.
Jonathan, we also got a chart that you sent over taking a look at silver. We have silver prices right around those 12-year highs. It has been outperforming gold in recent weeks. When you take a look at this chart, what does that tell you just in terms of that longer-term performance?
Yeah, I mean, this is a very, very long-term base going back. You could argue back to 2011, the last time we had kind of that parabolic move in silver. So, 12, 13 years in the making. And then really, to your point, that in the best precious metal bull markets, silver outperforms gold. And so that's really been lacking over the last couple of years, even when gold's doing well. So now we have silver and gold trending higher and silver outperforming gold. That's typically a sign of a strong precious metal bull market. And the miners that, if you want to talk about the GDX, that's also outperforming the metal. That's another sign of a strong, healthy precious metal bull market in our view.
Since you mentioned gold, I am curious. Obviously, gold is at record highs, but looking at gold ETFs, we are seeing some downward movement. It has picked up in the last couple of days. But what do you make of that differential there? Is that something that causes any concern for you?
I think it's just part of the uptrend process, and you get moves up, and then you get consolidation and pullback. There's nothing in the price chart of gold, whether you're looking at the commodity or the ETF, that suggests to us that a final top is in. There's obviously intermarket analysis at play, whether you're talking about when you get pops in the dollar or in real interest rates. Those can have short-term, create short-term headwinds for gold, but we think the trend is still higher, and we've probably yet to see the final high here for gold.
Jonathan, taking a step back and taking a look at the broader market here, you've got the S&P 500 coming off of 4 straight weeks of gains, like you pointed out in your most recent note. Lots of calls just about how much higher we could be going at this point. You are noting, though, within your recent chart, some tactical exhaustion. What do investors need to know?
Yeah, I mean, I think at this point it's more just a signal to maybe hold off on initiating new buys, broadly. There's obviously parts we just mentioned we think are timely, like energy, but I think broadly speaking, we've gone up 4 weeks in a row, made a marginal new high to that 5,300 level in the S&P. There's some complacency setting in the form of put call ratios. If you look at a 5 or 10-day moving average of the put call ratios, they're kind of back near year-to-date lows. So investors are not really embracing puts, and that's a sign of complacency. And then you have a little speculation creeping in. We know last week saw some of the meme stocks come back, and you actually had the all-time record highest volume day for the NASDAQ Composite last Thursday. A lot of that volume came in the form of sub $1 penny stocks. So that's another sign of a little bit of froth there, speculation. And so all of this just suggests that a little pause, consolidation is likely to kind of work off those signs of excess. But at this point, nothing major in the form of any sort of major pullback. I think just a consolidation.
All right, Jonathan, thank you so much. We're going to have to leave it there, but really appreciate you joining us here. That was Jonathan Krinsky. He is BTIG's Managing Director and Chief Market Technician.